to you from the floor of the CME Group. I'm Eric Wolfman Wilkinson. Let's get in the zone, the cash money zone. Well, it's 10, 11, 12, and it's WAS Day. We had the big economic, or the big corn number today, or grain number, if you will. And basically, all of these numbers came in line with what I've been talking about since July and in August. Corn production number came in at 122, a little bit below what I've been expecting since July and August. I was saying 123. The beans came in right in line with what I've been saying, 38 bushels per acre, came in 37.8. We'll call that a hit, I think. But the big thing about this is the beans did come in a little bit higher than everybody was expecting, or the USDA was expecting anyway. But the fact is the demand is so great that all of this is going to be sopped up. Now, I know that the production numbers, or the export numbers have been a bit on the low side, but that's because the internal factors for the demand in the United States has been greater, and they're not going to let go of that stuff before there's any excess demand. So now that we're seeing a little bit higher production numbers, that's going to be completely sopped up. The edamame is going to be gone. All right. The big thing that we had this morning was that the Syrian forces blew up a pipeline, and it's leaking into the Euphrates River. Now, I busted that out on Twitter. If you follow me, you saw that come out at 9:30 a.m. Chicago time, and that caused the market to rally about 80 cents. If you were on board watching my Twitter feed, you could just see that completely spike up. Then we got these crude oil production numbers also a little bit later at 10:30 Chicago time, and it showed that there was a big drawdown in this crude oil, and capacity utilization continues to go down. Now, everybody's been talking about maybe we should release the strategic oil reserves. My question is, why aren't we at like 90% capacity utilization or 100%? Why don't we start increasing the capacity utilization, which puts out more oil? I don't know why we're not, other than the fact that these guys are trying to drive prices higher, and it's working. Now, if you want some resistance numbers, $93 in crude oil is one of my resistance numbers. We've kind of since seen that trail back off into about 92.50 area, but I still continue to see the demand and this crimp in supply, if you will, in crude oil going to start drive this market up. Now, if you go around and are on the web, traderplanet.com, a good buddy of mine, Johnny Weir, played rugby with him for many years, came out with some great points that I completely agree with. Overnight, we saw the S&Ps trade down to 1421.50 area and held. Now, that's been a major support area. It is an indication that we may have seen a stop to this slide for the past 4 or 5 days. Now, another point that he came out with is 1435 is a key level that we should settle above if the bulls are going to have any more legs on this. Now, I am still in the camp that I think that the market is going to continue higher, but this key level, 1435, should hold today. We're trading right around that as I was walking up here, but that will be a monumental area for the bulls to hold, all right? So if you can't take that, take it easy. Gangnam Style.